Happy Thursday, ladies and gentlemen. This is Jimmy, and we have here BC Richfield in the house.
Hey guys, how
Hi,
you doing?
I'm sure they're doing fine, because today we're going to spoil you with two things. I would like to walk you through a phantom call I published last Sunday, and BC Richfield has another surprise for you guys. So, last Sunday, what was I thinking? Literally, what was I thinking? So, Sunday is normally the day that I do the scanning, often in the evening when the kids are sleeping. Why? Preparation is extremely important. If I do not prepare, I do not trade. It's simple as that. So, what was my thesis and what was going on? So, first, there was something that happened with Bitcoin last Friday. I will tell you what it was. Bitcoin bounced beautifully from a 200 MA. And it was not just like a normal MA, it's the 200 MA, and it bounced in the shape of a hammer, like a really solid, beautiful hammer. So there was a lot of confluence for me to expect a reversal to the upside. So I was checking, okay, what should I trade in terms of altcoins? So I came across Phantom. Phantom is now for weeks on in my focus list, so I often check Phantom. And there are actually a few things I like. Here's the call officially published last Sunday, and I'm going to talk to you about why Phantom. So two candles actually here. What do they present? They actually present rejection. So this is obviously a clear downtrend. Phantom decided to not go lower. The market did not allow Phantom to go lower. On the daily, this is really obvious. So on the 12-hour chart, there was a RSI breakout. So now I have actually two triggers, and that for me was in itself, including also the whole thing that was going on with Bitcoin, a reason for me to long Phantom. So we bought Phantom, really obvious. And then we have this final to P around 57 cent, which it has not touched it at all, obviously. So what it did was Phantom made a really nice move, woke up, in profit. That's always nice. It touched TP1, which is this gray box, and this TP2, which is here the green box. I personally expected a throwback, so a retest of this really obvious SNR level, but the market decided to go through this gray box, which also caused me to get stopped out from this trade. So after smashing two TPs, I got stopped out in profit. So am I mad? No. Am I sad? No. Am I happy with this trade? Yes, I do consider this as a successful trade, a decent R, and we just move forward to the next trade. I always tell people you are not as good as your current trade. There are always more trades ahead. So just go for them, chase them, prepare, chart them, have a focus list, revisit your charts often, set alerts, and when you see a trade setup that aligns with your trading system, what you do is you just set and forget. Not forgetting everything, of course, you need to manage the trade, but let the market do what it always do. Making the decisions, it's not us who's making the decisions, it's the market that making the decisions. We just move forward to the next trade. Right, Reese, Mr. Beachfield?
I don't know what I could say better than that, Jimmy, to be honest. You always put everything so eloquently.
Well, I tried.
Would have taken me half a day to dance around those points, as everybody that watches my live stream will know. But I think one of the key takeaways for me in that is how you're treating and respecting the trade, managing the trade, right? I see a lot of people get very frustrated because they've got a really good trade setup and a trade plan. They execute the plan well, but then they don't manage the trade, right? And their expectations then overlay. It's the same way when we walk in with any given bias. If we become attached to that bias, the chances are it's going to affect our overall trade plan, right? So you need to always be very, very nimble in these markets, and you need to be able to be in a position where you can switch bias or you can pull out as well at the same time. Just want to say a really big shout out to everybody in the chat. We've got like Seb in there, Bernd, Celsi Dragon as well, Stephen. We've got a really good turnout from Wales today, which is a country really close to my heart. My granddad was a Welshman from Aberystwyth. Spend a lot of time there in the north, down the coast, doing all the mountains and stuff. So it's a really beautiful, real beautiful hidden gem in the world, actually, I think, Wales. So welcome everybody from there and welcome everybody from everywhere. So Jimmy's very kindly going to allow me a few minutes here to dive into Bitcoin. Now, everybody that knows me knows I don't do these particularly quickly, but we're going to try and flip this on its head today, right? So what I want to do is I'm just going to start with a naked chart, right? And I'm going to run you guys just through my thoughts on this very, very quickly, all right? So we can see as we go on here onto the daily, right, we've had this big extended move up now. Bitcoin started to break down here, okay? So a lot of people were saying when you're kind of targeting these highs, a lot of people were getting very, very bullish up here. Now, there's a natural cause for that, right? Which is that when you start getting up and you're breaking highs like this here, then you see price action starting to set into a bullish trend, right? Now, the problem is that a lot of people want to get involved in this move on the way up, and these very fast moves often don't give you a chance to get involved. So what do we do in terms of what are we watching for? What kind of levels can we look for? Well, first of all, we've got this level, right? So this was our market structure shift, all right? This is when we went from bearish, lower lows, lower highs, and we took this out. We took out this high. So this was our structure shift. Now, for me, I'm just looking at the key levels where liquidity is resting, right? And what interested me a lot about this here is that we also have these equal highs, right? Now, whenever we see equal highs, equal lows, and they don't have to be exact, what we're looking for is what's resting beyond there. We can see here almost like a liquidity cluster, right? A lot of stop losses here when people are looking to go short. And with this being what would be interpreted as a key support resistance level, we assume that there will be breakout traders as well here, algorithms, bots that will trigger in order to push price higher. Now, what that allows is that allows for people to target this area with very, very large accounts and take that liquidity on the opposite side. So these all turn into buy orders, right? Because if we're short here, our stop loss becomes a market sell, yeah. And if we're a market buy, sorry, and if we're breaking out here, we're again on a market buy. So if we want to sell with a large account, well, that gives us a lot of buyers to pair our orders with, right? Which is why I've kind of been skeptical of this level here. So if we're looking at this on the higher time frames, right, then it makes sense to me to say, okay, well, look, we've set this high up here. So we've already probed this area, and we can see by the wick that we've been rejected. So getting back above this area, yeah, and then holding this level, I think the safe play from here is waiting for a move with displacement, right? And by that, I mean you want an energetic move through this level. We can take out this high, yeah, and with displacement, we want to see these, right? So these are our fair value gaps. So as we have one here, and I'm going to leave this one on there so that when we drop down to the lower time frame quickly, I'm going to show you my thoughts on how we can play this on the lower time frame. So as we're here on the daily, we've got our key level in here. What else can be supporting price? Well, when we see these opposing drops here, these bearish fair value gaps, and when we see them get overtaken, then quite often these areas can act as support, okay? So when we overlay these two here, and we say, okay, if we were looking for a pullback, right? So if we were looking for an opportunity for price to come back from here before potentially continuing a bullish run higher, yeah, so that's what we want to see, something like this. So what helps give us confluence here? When we look at this price leg from top to bottom, if we measure this out in terms of what would be a premium and discount area, now we want to be shorting from the lower 50% of this range. All right. Now, I know most people that do this have this as red and this as green. It's just the way that I've always done it, a little bit backwards in some ways. But we want to be long from the red box or potentially short from this box, because this price leg that's coming up here, we want to think that if we're thinking like the big players, if we're thinking like institutions, there's not enough confirmation here and the risk is poor if we want to go long. Okay. Because our stop on a higher time frame would have to be under here or under here, and the risk to reward just isn't there. So if we get this pullback into this area, this gives us a lot of confluence, right? This fair value gap here, the portion of it that sits within discount, yeah, could give us a nice opportunity to look on the lower time frames for potential long setups, okay? So now I'm going to drop straight down to the daily, all right? I do use the 4 hour occasionally, but I find that I get a lot of very good data from the daily candles, all right? And within that, we can see our much larger daily setups. Yeah, so this is our daily fair value gap, and this was our bearish fair value gap. Yeah, that overlays this one. So when we're looking at price action today, if we believe that's our draw on liquidity lower, then we have two options here. We can look for a key high time frame level to be run to the upside. So we're looking for our extremes here. And I'm just going to label this up as liquidity. All right. So for me, that's this, LIQ. And then if I'm looking to the lower side to see where price could be chasing for the stops below here or the liquidity resting below here, then I'm looking here. So there's two ways that we can look at this, or there are two ways that I look at this, which is if we run this level up here, get a rejection, come back into this, then we've got clean downside targets here via these lows. Okay, just zoom in a bit for you guys. So we could do an intraday play and say, okay, well, while price action isn't currently bearish here, we don't want to force our opinion on the market. We want to wait for the market to tell us. What we're looking for are key indications of what might happen. So if we look again and we talk about looking for our imbalances here, yeah, our fair value gaps. Well, up here, showing nice confluence with this level where we're talking about our liquidity, we have this bearish fair value gap, all right? So as price drops in here, this provides a good opportunity, as it did here, right? You see when price returned here, this then provides us with a good selling opportunity, right? If we apply our rules of premium and discount again, right? Then we take it from the high to the low here. And we say to ourselves, okay, this fair value gap here is sat in premium. So for me, I'm looking for this. If we got a run up into this, for example, yeah, and then on the lower time frames, we started to break structure, then this is what I would be looking at for potential shorting opportunities. Okay. Now we can run down onto the lower time frames as well from here and discuss what we're looking for. But realistically, and the reason that I'll cover this is because as we were talking about in terms of managing trade setups, if we're now looking at this here, when we're in these moves higher, yeah, then what we want to look for are these consolidations. Let me just get that out of the way. So as we said, we want to see clear and obvious moves. When this move here broke through this high, we got a structure shift to the upside. This is what we're talking about in terms of displacement, right? You see this very, very strong bullish candle that leaves this fair value gap. Now, when we mark this fair value gap, we see that price returns here to rebalance before it continues higher. Now, the other thing that we can use these for is when we look in here, if we have a strong fair value gap here, meaning that we've got more body than wick necessarily on the candle, something we can use this for is to say, okay, well, if this is no longer offering support, or if price is ripping through this, right, then as price holds below here, we have an expectation for lower prices because price is struggling to seek out the liquidity higher. It's going to come down to reprice, find where the buyers are before then potentially moving higher. Also, just really, really quickly, Billy, Gus, everybody welcome to the stream. Great to see all you guys on here as well. So in terms of how I'm looking at this, first of all, I'm saying, okay, well, I would like to see price get up to here, have a natural run on liquidity and then start to break down, right? But I'm also prepared to look at this and say, okay, maybe if price is weakening here and we're looking to break lower, then maybe this is the opportunity here if we struggle to get back above this. However, if we reclaim this and treat it as support, then we can use it as a platform to move higher. Now, the other reason I just wanted to bring this up quickly is in terms of managing your trades, right? So like Jimmy said, and it's such a valuable point, how he uses it and how he uses his understanding of the markets to manage his trade, to move his stop losses up so that he's limiting his risk. And at the moment, it looks like Darth Maul in the background. I wish you could see Jimmy on the camera. He's doing his exercises for his back with his hood up, and he just looks like an awesome Jedi. But the way that I'm using to manage these trades, right, as we go up, is I'm looking here, and a lot of my concepts, by the way, guys, are things that have been refined and learned for many years. I was fortunate to be part many years ago of ICT's original mentorship, and why I kind of expanded my horizons beyond that. I would always recommend anybody that's interested in these concepts really goes to the source to learn them. So as we break out here, what I'm looking for is I'm looking for the down close candles, right? Our order blocks. And this gives us extra confirmation on these order blocks, gives them extra validity when they're followed by a fair value gap, right? So if we look what happens here, we have our shift in market structure. Okay, that's our first indication that the market's now looking for higher prices, all right? So our market structure shift. What happens? We leave this inefficiency, this fair value gap, right? This is what we're talking about in terms of displacement. You want to see these energetic moves higher. Price retraces into this, okay, before then moving off. Does the same again. More displacement as we move higher. Price comes back in to rebalance here. It also revisits it here. So what's key about this is it's this down close candle that's supporting the market, right? So in the same vein, if we now look up here, we're saying, well, here's the last order block that pushed price higher, or we're looking at this order block here. And what we can do here is we can take the top, I take the top of the body of the order block. Let's just do this slightly thicker and do this in dark green to show that it's support. And what I'm looking for is I'm looking for this to be respected, and then for the candle itself to not have any closes below, right? Now this could purge out the bottom, almost like a deviation, right? Again, you could get people that on a lower time frame are then looking to short this. They've gone short too early. This gets flipped, their stops are above here, and this is what gives price the energy to run higher. However, if we start closing below this, yeah, and this was our last kind of line of key support, then we've got an area that we can trade this down to, right? And again, if we fail to hold this, then we're looking for liquidity below those lows. T244, Richard and Wax Shah, welcome guys, welcome. So look, at the moment, guys, that's all I've got from you. I'm trying to keep this a little bit shorter, all right? One thing I would say is if we're looking on the 4 hour and above, one of the really, really key things that I do always use for confluence is my B Pro. Anytime we're getting divergences, right, can be a key sign of misalignment between where the momentum is in the market and what we're seeing with price, all right? So as we can see here, right, we started getting the bullish divergences building here. We've come up to here. We haven't got a bearish divergence yet, right? So the other time frame that I check, and the main time frame that I'm using for my divergences, is the daily. And we can see here how lovely these have been caught, which catch these corrective moves. This divergence here came in a bit early, but did give us a heads up that we were going to, once we swept this liquidity and came back above, that we had a high probability trade to the upside. So that's it from me, guys. Big shout out and a big thank you to Jimmy as well for soldiering through this one and sitting in the background for us, and for his excellent insight on the trade recap. I hope you found it interesting. I hope you enjoyed the kind of shorter sessions and that we're running as well. And just one last thing to share with you guys. You can find out all the information for this down in the chat, down in the description below. But we've got a really, really exciting setup at the moment. Okay, so we're giving away 100 limited hoodies. I can't wait to get mine. We're in the same boat, the team. We've got our old hoodies, which are just awesome. They're amazing, made by an absolutely incredible Polish firm. They're some of the most high quality hoodies you can imagine. And we just wanted to do something a little bit special for people. We know there's a little bit of buoyancy now in the market and stuff. But we really want to make sure people are not kind of losing sight of the education side of trading, right? Very, very easy to kind of throw yourself in and think that, the market's going up, I'll just ape into some trades. But then when it turns on you and you kind of feel a little bit lost and you're not really sure what to do, it's so important that we back this up with education. Obviously at the Birb Nest, TBN as we call it, that's our real focus. We've got a fantastic trading community, tons of resources. You've got multiple professional traders that cover all kinds of different disciplines, from algorithmic builders to day traders to people that are taking position-based trading. You look at Birb recently with his trades, and that's something that we're going to look into. So take it, check it out in the description. You can also follow us on Twitter at the Birb Nest. You can come and check myself out as well as Jimmy. And yeah, it's just love doing these streams with you guys. Really appreciate you all coming along. We had really good viewing numbers today, so hopefully it's getting to a point that we're finding some people that find this useful as well. Also, a big shout out to everybody in the chat that joined today as well. So thanks so much, everyone. Wishing you nothing but a fantastic week ahead. And do come and check us out. Check out the details in the description. You can also grab a free trial for a week as well to come and see what we're all about. All right, guys, wishing you a seriously fantastic week and weekend ahead, and we'll catch you next week. Thanks, Jimmy.
Till next week. Bye, guys.